Today's Animal Spirits is brought to you by Crane Shares. To learn more about the risks invested in Crane Shares products, visit craneshares.com. Ben, I want to talk to you about KWEB, which is the China Internet ETF. Guess what it's down year to date?
A lot? A little?
Give me a number. For God's sakes, just give me the damn number.
I cheated. I had it pulled up. I was looking.
Okay. All right. Well, spoiler, revealed. It's down 15% year to date. Through the end of October, or at the lows in October, it's down 50% year to date.
Huge bounce, is one. Right?
What's that?
Huge bounce, right?
Huge. Guess who caught a little bit of it?
Not to brag.
Not to brag, but I bought Tencent. Why? Because I'm, of course, an expert on Chinese internet company. No, it was the best looking chart of the bunch. But if you don't feel like picking Chinese stocks, well, you don't have to do anything. But if you want to own some of these names and you want to get broad diversified exposure, there's an ETF for that.
This is also a good reminder that predicting the future is hard.
Not if you're right.
Well, the news out of China has not been great, and these stocks are ripping.
That is very true.
It's interesting. That's all I'm saying.
All right. If you want to check out Crane Shares, visit craneshares.com to learn more.
Welcome to Animal Spirits with Michael and Ben. Michael, it's a Christmas miracle. Christmas came early. SBF got arrested yesterday. I'm all for it. Throw the book at him. Inflation coming down. Too early to completely call a victory on inflation, but we're finally trending in the right direction.
And you missed one.
What's that?
A phenomenal finale of the White Lotus. Best 72 hours of 2022.
Jeez, it has to be close with as bad as things have been. All right, so why don't you do your timestamp here so everyone knows what time it is?
Tuesday, December 13th, 9:18 a.m. Eastern Standard Time.
Because the futures are flying right now. So we don't throw this in our face if the market crashes by the end of the day for some reason. Just throwing that out there. So inflation came in under expectations, right? I think the 3-month, if you annualize the last 3 months of inflation, it would be 3.7%. Right? I'm taking some liberties there, but that's not bad.
7.1 year over year versus 7.3 expected, 0.1% month over month.
Right. So Heather Long had and the 7.1 is it's hard because a lot of that is the backfilled higher inflation, right? So that it's going to remain high for a while because the starting months were a little higher. But Heather Long has some of the breakdown. Gas was down 2%, utilities down over 1%, used cars were down 3%, airfare down 3%, food was up 0.5%, slowest in months. Services inflation without shelter was flat. And the shelter thing we know is going to come down. So that's the thing that I think is probably the most positive.
Well, we've got this pretty little pie chart here. That's 43% almost is housing.
Well, so the shelter is still high because it's a smoothing effect and takes time. We've mentioned this before, and we know that in the future that's going to fall. So that's going to be even a bigger tailwind in the future. What else we got here? Okay, so look at the rolling 12-month, trailing 12-month inflation rate. Give me some technical analysis on this. That's like do I see two shoulders there, a neckline? Am I reading that correctly?
We've got airfare inflation is still super high. I was talking to a couple yesterday about potential spring break trips in April, and airfare is just outrageous. I might take a driving trip.
How long would it take you to drive to Florida? Or are you going to drive somewhere else?
That I'm not doing. We threw out the idea of going back to the Outer Banks, which is like an 8 to 9 hour drive.
We're going to Florida for spring break, and yeah, it was upwards of $1,000 a ticket. We have a family of 5, and so we're driving to Detroit to save money on airfare. This is how I'm hedging inflation.
I have a question about spring break. How come there's not a national calendar for these sort of things? Like for us, question. I think is spring break President's Week or is that February? I think it's February.
The reason is because if literally everyone had the same spring break, it would be insane. Nothing would get done.
Oh, so you think that our forefathers who they foresaw that?
We have to break it up.
Oh, there is probably an interesting history on spring break. When did that become a thing?
In the 1980s in Daytona, Florida. I don't know.
Remember? Yeah, I'm gonna save that. I'm gonna skip that one.
Okay, what's this Callie Cox one here?
So Callie Cox threw a chart up there. Goods inflation is slowing. Services inflation is not. The good news is that the Fed has more control over services inflation. What was that really interesting stat that we spoke about on Animal Spirits and Josh and I did on what are your thoughts from, I think it was from Sam pulled this from one of the banks, that services is 2/3 of the economy, but
Right.
only 1/3 of the stock market. Is that about right?
Yes.
Or do I have it backwards?
No, you're right. Services is a huge part of the economy. Yeah. So I guess it's way too early to spike the football on this, but if we got another one, that would be what, 3 really good prints in a row? So because I think, don't you think if the next release in January came out higher than expected, markets would just tank again? Or do you think we're past that point?
Oh yeah. Oh my God. No, past that point. Oh no.
Okay.
If inflation, if we had a surprise inflation reading in January, February, March, that would not be good.
Can we just talk about some early surprises from this again, without like, it's far from totally. There's no conclusion yet.
Well, does this mean Santa's coming?
Which, by the way, sidebar, that's one of the best parts about White Lotus is that there's a beginning and then there's going to be a conclusion at the end. That's, I think, what I like. It's not open-ended. You don't have to like assume it's going to be 5 more seasons until you get a conclusion. It's just, you're getting it in 1 year. So we don't have that in the economy.
Can I just say one thing about the Santa Claus rally?
Sure.
I gave these stats to CNBC, so let me just pull them up. I was shocked by this.
So wasn't Santa Claus created by like a department store back in the day? Wasn't it like Woolworths or something created him in the early 1900s?
No, it's from the Bible. I don't know the history of Santa.
So who created the Santa Claus rally then?
Us, we did.
Okay, capitalism. Capitalism.
All right, so this is the data. I went back to 1950. The S&P 500 was up an average of 1.3% over a 7-day period. I think it's the last 5 days of the year and the first 2 days of the new year. 1.3% is the average return, and it was positive 79% of the time.
Wait,
why?
What period are you talking about here?
The Santa Claus rally is the last 5 days of the year and the 2 days of the new year. It's a 7-day period.
How did you come up with this definition? I've never heard this before.
That's not me. That's just what it is. That's what it's been agreed upon.
Okay.
So again, 1.3% over 7 days, 79% positive. All other 7-day periods, the average return is 0.24%, and it was positive just 58% of the time. That's a massive spread. 1.3 versus 0.24%, 78% positive versus 58% positive. Those are meaningful differences.
Is there a seasonality component to this where like no one's working on Wall Street that last week?
Well, what does that matter?
I don't know.
No one's working, so stocks go up?
No one's working and everyone's in a good mood. And people are drunk for that whole week? I don't know.
I must say, you should take the L right now on granular being an SAT word. I think what happens is you had that guy in your life that used it and he threw off your understanding of granular. It's not, come on, I'm not a word guy. That's very basic.
Have you been thinking about this for the last week? It's okay. Everyone has their words that they use. Granular is yours.
No, it's not. It's the first time I've used it on the show because you called me out. There's a good chart on from I don't know who, Dario Perkins showed a chart of inflation over 3 periods. Inflation. There's like been very few periods of inflation. You know what I mean?
That's the thing. That's why everyone points to the 70s because it's
That's
the
all
only one we can think of. That is. It really is.
So we're looking at months from peak 1973 to 1976, 1978 to 1982, and once it peaked, it pretty much went straight down. And there was maybe a bit of a pickup again a couple months after the peak, but not really.
But inflation was high in the 80s, but it was falling. That's the thing. People hate rising inflation. If it think about it,
that's exactly right. That's exactly right. You had 7.1% inflation in November of last year, and or December. I can't remember when. And the market absolutely shit the bed. And now
we're celebrating it.
Now on 7.1% on the way up is awful. 7.1 on the way down is reason to celebrate.
In our research, I think you and I have both done this. If you look at the stock market in periods of rising inflation versus falling inflation, the annual returns are like 10% difference. It's a huge difference.
There was a tweet earlier in the week from Nick Timiraos showing the Atlanta Fed wage growth tracker. And this is not what you want to see. So this is the sticky part. Wages continue to rise, and this hit the stock market. Not terribly, but when this tweet dropped, the market reacted.
Here's the thing though. If inflation continues to fall, wages will fall too. Like it's not like wages are going to stay strong if inflation is falling. Wages are going to come in with inflation.
Is it too early? Again, there's nobody spiking the football here, but this is what a soft landing looks like. No, inflation is coming down. Unemployment is still low. What if they do it? What if they do it? Will Powell's legacy actually end up looking good?
This is we've looked at every period historically. High inflation has never been brought down without a recession. You can't bring inflation down without the unemployment rate rising. And so far, so good. It hasn't happened yet.
If you asked Wall Street professionals 6 months ago with the odds of a soft landing, 15%?
Probably. Here's the other thing, though. And you're never going to be able to know because there are no counterfactuals. Would inflation have fallen anyway without the Fed? If the Fed didn't raise rates so aggressively, or if they would have just raised them a little bit to like 3%, would have inflation still fallen? We honestly will never know, but it's possible that a lot of this stuff really was pandemic related, right? Because
Duncan said, please don't ruin Santa for anyone with kids watching. Hellfire will rain down on us.
I'm kind of ready. My daughter is 8. I think she kind of knows. I kind of just want to tell her. I know in the back of her head she knows.
Not to pick too many nits in a great Christmas movie. Home Alone 2. So
right, we just watched it too. We watched both of them last weekend.
All right, so there's a few scenes that don't really pass muster. I have no idea what that phrase means, but one, when Kevin McAllister follows the wrong dad.
Yes.
And just gets on the plane.
But that was the 90s, though. You could have done that probably.
I suppose. 2, there is no New York airport.
You can see the city.
On the East River where you're just looking at the city. 3, he just gets into a taxi. Yeah, sure.
No, you don't. No, the biggest
4,
one is
he's on top of the Twin Towers by himself. Literally by himself.
That was pretty bonkers. No, the biggest one was
great movie. Great movie.
My kids love the first. The second one, the most boomer thing of all time is the parents sitting in first class and the kids sitting in coach. But here's the other problem. They left him a year before, and the mom doesn't sit by him on the plane to make sure he's on it the second time around. Yeah. I mean, it's the movie. But, okay. So again, wages will fall if inflation falls. But again, do you think that it's possible the Fed didn't have as much of an impact as we thought? Or can you give them credit for like the whole oil falling and gas falling because people are worried about a recession because of the Fed?
No, I thought we decided the White House did that.
Okay. But I'm just saying, I think, if I'm putting numbers on it, I'm putting like 60% of this stuff would have fallen anyway. Maybe 40% is the Fed raising rates aggressively.
Them raising rates completely wiped out asset prices, which are a huge part of this.
Yes, but here's the thing. Did a bear market in the stock market stop people from spending money?
No.
Was anyone on an airplane going, oh, shoot, my stocks are down 30% this year. I better not go on this trip?
No.
That didn't happen. So I don't know what that really did besides slow the housing market.
I continue to be in the camp that inflation, there's no analog for this period of time. It's just too weird.
I agree. Okay, so Carl, some other charts. Carl Quintanilla, deflation in used cars, the Manheim Index, I think kind of called this and it's down 3%. I was talking about this with you yesterday. Carvana was a $370 stock. Now it's at $4.80 as of yesterday. I don't know if it's ripping today at all. It's down 98.7% from the highs. I mean, that's almost, so there was an analyst who said that they think they could run out of money if they don't get more funding. What are they going to do with those car vending machines? Do we turn them into a WeWork? Like you've seen those before on the side. Like we were in Houston last week.
Yeah, like giant Matchbox things.
So look at the other crazy ones. We've talked about this. The container freight shipping stuff.
By the way, the market is open, and we've got
what, Nasdaq up 3%.
I mean, it's just listen. These are higher lows. We're looking at higher lows.
So I'm looking
for the first time all year. I'm just quickly eyeballing this. This is a higher high. You son of a gun. It's a higher high.
So the Fed comes out tomorrow and says, all right, inflation is going in the right direction. We're going to raise rates 25 basis points instead of 50.
That's not happening.
I'm saying that did happen. Markets would rip 5%. Probably?
Yeah, not happening.
No, they're just going to go 50. But okay,
so yeah, S&P 500 is down 12.7% year to date. We're making a lot of assumptions, but let's assume that the market closes okay. Let's assume that this is the green light for a year-end rally because people are so underinvested and maybe we're on the other side of this. What if the S&P 500 ends the year down like 7%?
So Ed Yardeni said, if it ended on October 12th, if that was the bottom, the S&P 500 was in bear market territory, meaning down 20% for only 45 days. So let's say we're down 10% at the end of the year.
Okay.
And let's say I think the hard part is what comes next. Because I think that getting rid of that big chunk of inflation was easy because that was the COVID stuff, I think, in a lot of ways.
I'll plant my flag and say stocks are going to fall 10% next year.
So let's say stocks are down 10% this year and down 10% next year. Would that be worse than being just down 25% this year?
Would that be worse? Well, okay. There's a distinction here. What's the question? Would down 20 let's just say down 20. Would down 20 be worse than down 10 down 10?
Yes. I think down 10 down 10 would be worse. Well,
hold on. Would down 20 then flat be worse than down 10 down 10?
Yes.
Good question. I'm not sure.
I looked at the stats. I got to update the stats, but
I think down 15 would be worse than down 30.
Like the 2000 to 2002 bear market was down 3 years in a row, but it was like 22, 11, and 9. And that to me is just
the longer
brutal.
the longer it goes, the worse it hurts. I think investors can more stomach a quick decline that stops going down versus just multiple years of leakage.
I got one more. Worse. I got one more inflation.
What do you think? What do you think?
I think the prolonged thing was worse.
Yeah.
I think the longer it goes, the harder it is.
Yeah.
Bill McBride did a lumber chart, which is basically round tripped and back to where it was before. I listened to the Toll Brothers.
I've got an update in my mudroom.
Okay.
The second quote that I got is, hang on, let me do some quick math. Whoops. Is like just over, is like 60% of the first quote that I got.
Well, you should show him a chart of lumber prices. So,
well, you know what I should do? I should say, that's great. Get me a third quote.
Yeah, that's true. The Toll Brothers CEO said they're saving $12,000 to $14,000 per house on lumber alone from where it was at the peak.
And they're passing it along to consumers. It's great.
Yeah, I'm sure. Yeah, but that's the thing. I think their margins remain at peak levels. Anyway, I think
home builders are up 5% today.
I think you could say if that was the worst of it, and even if markets just kind of are range bound from here for a while, if that was the worst of it, I still think 2022 could have been worse considering everything that happened.
Well, of course. So, all right. So I'm just doing a quick math.
But no, we didn't even get an average bear market. The average bear market down 20% or worse is down 32 or 33%.
Yeah.
So if that was it, we didn't even get an average bear market, which to me, if you add all up what we went through, it's kind of shocking.
So to take out the lows that we saw in, was it October? I think it was October. To take out those lows, the S&P would need to fall around 13% from here. There was and again, we're all speculating, right? We don't know what's priced in if that was the worst of it. If in 2023 earnings soften and then we roll over, like there's,
right. If we get a recession, we could retest those for sure.
Yeah, who knows? It's definitely way too early to be like, all right, that's it. We're in the clear.
But this is the fun part about the markets is like it's pretending like stuff is over.
Yeah. No, it's never over. I mean, the market opens tomorrow and the next day and the next day. I want to get your reaction to this meme. There's an asteroid heading towards Earth, and a Tyrannosaurus Rex says, that looks really bad. And a Triceratops says, relax, it's already priced in.
That looks like a perma-bear meme to me.
It's a perma-bear meme. I guess the idea that we kind of know that the economy is softening, whether or not we go into a technical recession is sort of besides the point. But I think here's the thing. Here's where the pushback, and it's a cute meme. I laughed. We don't know. We don't see an asteroid. You know what I mean?
True.
It's obviously not that clear.
It's not a don't look up situation.
Yeah, it's not. I mean, is it fairly obvious that the economy will most likely soften in 2023? Yeah, but is that an asteroid?
Right. And I think people forget we see GDP numbers with inflation. So if you looked at nominal GDP, it's been like 10%, 8 to 10%. Which is, so there's no way that can continue, but it really depends on what the inflation is.
I said to you, I think this was, I can't remember if it was on Friday. I said to you and Josh that this was the second week in a row we got data that should have killed stocks.
Yeah.
Last week, meaning I think 2 weeks ago, was strong unemployment. Market did not go down on that. And this week was high wages and hot PPI. And the market did not really move lower on that either. I don't know if the market was collectively looking forward towards the CPI print.
I think my whole contention is the market can only care about one thing at a time.
Really?
Right? I think the market really only cares about, and for the last 6 months, that's been inflation. Inflation has been the only thing that matters. Inflation is trending in the right direction. The market is willing to let the other stuff go. Inflation was trending in the wrong direction. This other stuff is bad, and it makes it even worse.
That's
true.
That's
what happened.
But making this year just so much weirder is we kept talking about how many things there were to juggle in the economy and all these mixed messages. But again, you're right. I think all that the market cared about was inflation.
So, but that's to your point. When does it move on from inflation and start worrying about the economy potentially slowing?
Well, if we get another month or two of lower CPI, we'll say, boom, mission accomplished. And then in all likelihood, people will transition to, all right, now let's see what earnings growth or lack thereof is.
Nothing being over yet. This was a headline in the Bloomberg, and a lot of people were saying this is going to get dunked on later, but it says the Federal Reserve is deflating financial bubbles without a crash. And I have to say, the speed at which they raised rates, and if you would have told me at the beginning of the year mortgage rates are going from 3 to 7, I would have said that's never happening in a million years. There's no one was predicting that.
Mm-mm.
I don't think anyone was predicting 5% mortgage rates. So the fact that happened and stuff didn't really break yet, it might be too early to tell.
Well, but
surprising to me.
I'm just thinking out loud. Why would the Fed get credit for a soft landing? I know it's a dumb question saying it out loud, but if you're saying that these inflationary pressures would have eased regardless, there's an alternate universe where the Fed does crash the market, and it still might happen.
Yes, it's possible. But I think the fact that crypto has just completely fallen out of bed and there's been no spillover into anything else, right?
Well, that part I'm not surprised about that. But the fact that
these
the housing
tech stocks that have fallen 70 or 80%, these like a lot of stuff that's slow, like the bubble stuff did deflate.
Tech, meme stocks, housing, crypto. But there is a depression in tech land. I mean, if you're an employee in a technology company, this is a full-blown recession.
True. Yes. Right. The labor market is strong besides the technology sector, right? You're right. To them, it does feel like we've been in a recession for 6 months already.
What are rates? So the dollar's going way lower. The 10-year was much lower this morning. Where is it now? 3.45, down from a high of almost 4.4.
I think 4.2 or 4.3 was the high for the 10-year.
Tom Dunleavy has this good chart showing the average returns.
Can we take back our thing about our take that interest rates are never going higher in the future? Because if 4.2% was the highest for this cycle, it's possible maybe rates just aren't ever going to go back to 5 or 6%.
I think I'm not ready to say that, even though I was clearly wrong. I never thought that interest rates would go above 3%. I was dead wrong. I don't. Let me go from one month prediction to doubling down. I don't see like 7 or 8%. How would that happen? That would have to be just inflation continuing higher.
My whole contention is just that we literally can't afford to have, like, as a country, we can't afford, because of all the debt we have.
Oh, so what? There's no rules. Doesn't mean we can't have something we can't afford.
But the country would revolt if 7% interest rates and the amount of money that was going to pay our debt back. We'd have to cancel debt to China or something. Like, there's no way that the country could continue to function if 50% of the budget went to interest payments.
That sounds like CZ saying to the authorities that don't indict Binance because it would be bad for the crypto economy.
Did he really say that?
Something like that.
Okay. Honestly, if I was in that space, I would say put them all in jail now and start from scratch. Get rid of all of them.
Put them all in jail.
All the crypto frauds. Just throw them all in jail.
Oh, well, the frauds, sure. Tom Dunleavy has a interesting table from Bank of America looking at the average returns after the last rate hike in inflationary and disinflationary periods. So let's go with the disinflationary.
So the Fed's done hiking, and then what happens after that?
So the top one is showing inflation continues to advance, in which case bonds did well. Well, that's interesting. Actually, I wouldn't expect that. Well, actually, maybe if the Fed done hiking.
That's because rates were so high back then.
But let's look at the disinflationary period. So once the Fed was done hiking and CPI continued to roll, returns are 13% higher 6 months out. Bonds
dollar lower or dollar.
It's pretty good.
Very strong. Yeah.
Anyway, the point is if once the Fed is done hiking, returns look better 6 months out.
All right, so Vanguard had their forecast for 2023 and beyond.
What are they saying? Negative 2.4% real returns for large cap stocks?
You know, the funny thing is, I trust Vanguard's outlook more than anyone else. I think they're the most sober-minded people I think that there are. Is that fair to say? Like, I wouldn't
Well,
expect
you would say that.
I don't know what the word means, but I wouldn't expect Vanguard to gaslight us. Did I use that correctly?
All right, so what are they saying?
Well, so they're looking at inflation and growth, and so I mean they're looking at GDP growth for 2023 at like 25 basis points. Consensus is like 9.9%, so it's not very strong growth. But they're looking at Vanguard says headline inflation is going to be 3%. Surprisingly, it's still most people think it's going to be like 6% above in UK and Europe, which is pretty high. But then they also looked at 10-year return expectations, and they break it down into percentiles, but the 50th percentile is just kind of what the average would be. They're looking at U.S. stocks of, call it 6% a year, global ex-U.S. 8.4%. So not end of the world.
In dollars or local?
So I guess that would be probably local, in dollars. So saying
local
that,
in dollars. Well, which is it?
No, in dollars.
Okay.
Sorry, I meant local to a U.S. investor.
Got it.
So it's not like end of the world like some people are predicting, but not like amazing, which after what we just went through, 6% a year, I think most people would say sign me up for that. If you get 6% a year in your stocks and starting rates of 4% in bonds, 5%, call it 60-40, sign me up, right?
Take it.
I would take it.
But what happens if you pick the best stocks? So to that point, what a transition that was, not to brag. Jeffrey Patak tweeted, among U.S. stock funds, there have been 11,517 funds that have had at least one 5-year return since 1997. Those funds had 132,000 5-year measurements versus their style-specific indexes over that span. They beat the index in 50,000 of those instances, lagged in the other 81,000. So I've got two thoughts here. One,
so those
that's
like
not that
rolling 5-year returns then?
Yeah.
Okay.
My first thought is that's not so bad. 50 beat, 81 lost. I mean, it's not great, obviously, but we know that. It's not terrible. And the other thing that I would say
so
is
40% of the time they outperformed? Ish?
The other thing that I would say, the other thing that I would say is and we do this sort of thing with stocks too, where it's like, oh my God, Amazon is back to where it was in July 2020. But that, of course, makes the assumption that people buy and hold these things forever. Now, I'm not saying that you're going to have a better experience if you time mutual fund managers, but people don't buy and hold. So then you can make the case, well, actually, if you're saying that, then the average return is going to be even worse because people buy and sell at the wrong time, which, granted, probably true.
Don't you think most people with even active mutual funds, most people are just buying and holding because it's in 401ks?
I don't know. I mean, certainly now, but like, for example,
here's a question for Morningstar. What's like the average turnover for an actively managed mutual fund?
Well, they know
in terms of the investors.
Here's another example of like exactly what I'm talking about. So Netflix is down 46% over the last year. Guess what? I'm up about 40% of my next trade.
I know you've been sliding in Netflix to every conversation just to tell people that you bought it before it took off.
Well, listen, I am so forthright with all of my losses, of which there are gazillions.
It is pretty funny, though, that you missed Netflix after it had that huge pop, but then it came back in and you bought it.
Well, that is credit to me, because I've seen gaps get filled. Saw the gap get filled. I wanted to invest in Netflix, not trade. I wanted to invest. The gap got filled, and boom. But one other point that Jeffrey made in this thread was the persistency of returns. The persistency of returns does not exist. Meaning, like, the best managers don't win year after year after year. That would probably be a giant red flag if they did.
Even if you could pick the best long-term managers, right? They're not going to outperform every 3-year period or whatever.
Returns are lumpy. But that makes it even harder.
Yeah.
That makes it even harder because I saw a stat from Vanguard years ago, and it's directionally right even if the numbers aren't accurate. Over a 20-year period, 14% of all large blend managers beat their benchmark, only 14%. But of that 14% subset, 72% of them underperformed for 3 years in a row. And that's the problem.
How about this
That's
question?
a problem.
Here's what I thought when I did.
And when I say the problem, I just mean behaviorally, investorally. Like, sticking with the underperformance is very difficult.
In my institutional days, we did a lot of manager of manager. That was the approach. We picked a lot of other managers and talked to a lot of them. My experience was, I think picking picking people who pick stocks is even harder than picking stocks. What do you think? Which one do you think is harder?
I'd say they're both as equally as difficult.
They're both pretty hard. But I think, to your point, trying to figure out if you're being disciplined by sticking with a actively managed fund that is down, or you're being naive, I think that's one of the hardest things to figure out.
Hardest thing. And not just with active, just with any strategy. Am I being disciplined or am I being stubborn?
Yes, exactly.
Daniel Sodoroff had a really interesting tweet. He said, and Daniel's another guy from Morningstar, rare combination of profitability and low multiples in XLE at the end of November. It was the third most profitable, looking at return on equity, and simultaneously the fourth cheapest. So does energy have legs going into 2023? I mean, that's what this would suggest, no? And it's got momentum on it. It's got the tailwind of rising prices on its side.
Last week, I asked if energy could be that sort of long-term hedge like a commodities play. And a lot of people said that this is kind of a one-off thing. The huge divergence in energy coming from such a low base and being so cheap, that's probably not going to happen again.
I buy that.
Right.
Some John Arnold tweeted, this is a fair tweet. People never seem to commend oil companies when gas prices decline.
That's fair. You blame them when the gas prices are high. And yeah.
By the way, speaking of energy, we had a conversation. We had a conversation coming out next Monday with I'm drawing a blank on his name. I know we just spoke to him. Mark Newman. Yeah. Who runs the opposite of an ESG strategy. And I thought it was a good conversation, a bit I don't know if uncomfortable is the right word, but ruffle some feathers. Well, it made my head hurt a little bit because he made some good points about ESG, some hypocrisy, some, I don't know if double standards is the right word, but some interesting points. Made me think about some things.
All right, a bunch of people sent us this. This was from Quarter. What's RH again?
Restoration Hardware.
Restoration Hardware. Which, have you ever been in one of those before?
Mm-mm.
Ridiculously expensive from my experience. But he said the housing industry is in a free fall. This is the CEO. I think the National Association of Realtors just reported that housing demand was down 37% in October. We've never, at least in my lifetime, I've never seen interest rates rise so quickly. I don't think anybody on the phone says either. And the impact of the housing market, especially when you look at it versus the housing market that was overinflated in a run up, you're going to have some wild swings here. He's basically saying, like, we're screwed. No one's buying anything from us. It's like the consumer is dead. All these things. Contrast that with Lululemon CEO on CNBC. We haven't seen any weakness in our consumer.
Oh, yeah? Look at the stock.
Like Lululemon getting killed. Here's the thing, though. I don't think you can ever use CEOs as a macro indicator.
Macro? No, micro.
Yes, but not, at a macro indicator, when CEOs talk about the macro, they are taking what they see with their consumers in their little niche, and they're trying to throw that to I don't think that's useful for a macro indicator, a CEO. Think about how many times Jamie Dimon has been wrong over the last 10 years.
Well, that's true. But somebody that's in a niche market like Restoration Hardware, you don't think that he has insights into the housing market?
Yes, but into his one little ultra expensive, high-end, whatever. And maybe people just bought everything they wanted to buy and they pulled forward demand. And now that's slowing. I'm just saying you can't use CEOs as a macro indicator. Have you ever bought Lululemon pants, by the way?
No, we're gonna put a pin in that because we have Lulu for a great quarter, guys. All right, let's talk about crypto. I guess let's start with the block. To me, this was just fucking awful, shitty news.
Well, do you have anything to say about him getting arrested?
Well, no, of course we'll get to that. I just want to start with the block. So there was news that the CEO, I believe his name is Mike McCaffrey, took a loan. I guess I don't know if it was business or personal. I think there might have been both. From SBF to the tune of, what was it, 17 million for the first one, 15 for the second, something like that.
This guy had his tentacles in everything. I mean, it's honestly, it's no wonder he had such a sterling reputation because he bought everyone.
Yeah, he was a gangster. I don't mean that in a good way, obviously.
Right.
So the block, I don't know if it was the most trusted name in crypto, but I'm a huge fan of FinTech Frank and Larry. I forget how you pronounce his last name. I think those are reputable guys with integrity, and just watching some of the venom being thrown at them, which obviously, listen, that's Twitter. It's not a surprise at all. It sucks. It sucks. I can't imagine like those guys and everyone in the company just feeling so blindsided by this asshole.
Right. And the thing is, and maybe it was in their best interest to look the other way, but after it all came out about him, why wouldn't they report about it?
They had been.
Right.
They had been. Frank, we spoke about this last week. He did an amazing conversation.
No, I mean about the fact that he had funded their company. I think a lot of people were insinuating that they knew that this was happening. I think they were just blindsided.
No, I say no way. By the way, you know what didn't age well when Ackman said, I believe, call me crazy. Call me crazy. All right, so there was an article in Semaphore about, we don't need to get in this. We'll link to it if you want to look at just all the losses, just losses all over the place. Here's their spreadsheet. What year was this?
So do you think, if you remember, everyone thought that like this guy was at Jane Street and that's like the ultimate trading firm. Does that place's reputation take a hit here? Since this guy was obviously an idiot, he was a horrible trader.
I don't think that's fair.
I'm kidding. I know,
yeah,
I'm kidding.
Yeah. Well, I'm sure they feel guilty by association, but that's not fair. So there's a spreadsheet showing months, profit per day percentage, and the accuracy. So here we go. November, profit per day, 16,600. December, 133,300. January, 500. February, negative 500. March, 100. Whatever, you get the point. But when you look at the accuracy, guess, estimate.
Oh, they were just making it up.
They were just making it up. The FT reported they found their venture fund, Alameda's venture fund. There's 500 holdings marked at $5.4 billion. LOL. They invested 100 million into two of Sequoia's funds. This bankruptcy is going to take years.
Well, we've had a bunch of listeners reach out and say, "Hey, I had money at this place. How long is it going to take me to get it back? How many cents on the dollar am I going to get?" And I think it's going to take a long, long time to sort it all out. Right?
It sounds like this. How did the illiquid stuff get unwound? I literally have no idea how that works.
I don't know if it gets sold on a secondary market at a discount, or you're right, but it's ownership, and those things are, I mean, who knows about the marks, but
so anyway, this is from the SEC report from of his arrest, I guess. From the inception of FTX, Bankman-Fried diverted FTX customer funds to Alameda, and he continued to do so until FTX's collapse in November 2022. Bankman-Fried diverted FTX customer funds to Alameda in essentially two ways: by directing FTX customers to deposit fiat currency into bank accounts controlled by Alameda, and two, by enabling Alameda to draw down from a virtually limitless line of credit at FTX, which was funded by FTX customer assets. It's just crazy that
everything we thought he was doing and said he was doing.
Customer deposits were funding the hedge fund, which was blowing up. How many times did this hedge fund blow up? Who knows?
I hope this guy goes to prison for life, because think about all the lives he's ruined. Like, I'm sure there probably haven't been stories yet, but I'm sure there's people who've killed themselves over this, who've lost their entire life savings. Like, he ruined people's lives.
Oh, yes.
Countless people.
Oh, yes. Steve Leisman tweeted, just 8% of Americans have a positive view of cryptocurrencies now, CNBC survey finds. Oh, that's shocking. Oh, just 8%.
that might be on the high side. And not surprising.
So I shudder to say that I'm still bullish on cryptocurrencies long term, but I don't have a positive view now.
No. Which another funny part about crypto is Bitcoin is ripping this morning because inflation was down, which is that was like the one macro thing they're trying to hang their hat on, is it's going to be an inflation hedge, and it's obviously completely opposite.
It's a risk asset. I think that much is clear, at least as of now. All right, so people are getting upset, and I'm talking out of my butt because I don't know anything about how this process works, about how long it took. Like, why is he still walking around giving interviews? And
I was saying this.
Yeah, me too. I mean, it's maddening. Bill Wang was arrested 13 months after Archegos collapsed. Now, I guess the counterpoint is Bill Wang was a family office and it was mostly his money.
I think that because the day we heard about Madoff is the day he got arrested, but I'm guessing that they were building a case together. Yeah,
exactly.
So I think everyone was blindsided by FTX happening.
So the thing is, I don't know when has it been a month and a little since this happened? I think it was early November. Guess what? They can't just go arrest a guy. They have to build a case. Is that fair to say?
Yeah, I think, and
I'm sure that they've been working.
Irritated people is that he just kept talking, and he's doing Twitter Spaces, and he's doing interviews, and he's DMing people, and he wouldn't shut up. That's why people just want, like, arrest this guy and get him out of my face. I
Yeah.
think that's
No.
that's
Listen,
why everyone's mad.
I'm not even sympathetic to that. I was totally. That was. The
I hope
same
he was
tune that I
playing
saying.
League of Legends as he got arrested. I really hope that happened. Hang on. I got one more level here.
All right. Here's
Jerk.
the take.
He's such a scumbag.
Here's the take. I think two things. One, the housing market is arguably the most important part of the U.S. economy.
Easily.
Okay.
For middle class consumers, yes.
So if the housing market remains frozen, I don't see how that doesn't affect the economy in ways that I'm not really clear on. Consumer spending, sentiment, I don't know, but you would just think it has to, right? It has to. I also think that the housing market, if mortgage rates fall, will rip again, because I think that there are people that got locked out.
People are waiting.
And I don't know where the level is. I don't know if it's 5 3/8
I think
or
it's
5 4/12. I have no idea. But I think that the housing market can rip again very quickly.
I think if we get 5% mortgage rates, demand is going to come rushing
Like
back in, and people are waiting.
You could see a V-shaped rally in housing.
Yes, and I don't necessarily know that it'll
maybe
be
not to new highs and prices.
Yeah, I don't think it'll be prices
activity.
coming back, but activity will come back, because people will be anchoring now to 7.2% and going, man, it could have been a lot worse. So we get to 5, people are going to go, that sounds way more reasonable, and reasonable. Prices are coming down.
Yeah. So, all right. But right now, make no mistake, the housing market is still frozen. Rick Palacios tweeted, housing starts fell off a cliff in November. Many home builders in our monthly survey are hitting the pause button until costs drop. Bill McBride tweeted, in early December, 75% of nationally surveyed home builders confirmed they are buying down buyers' mortgage rates to make payments more affordable.
They're basically paying points for them. They're getting, builders are paying money to lower mortgage rates for their buyers. They're saying, you can get 6.5, we'll get it down to 6 for you, or to make it more affordable. Because they just want to get that. We talked about last week how the builders want to get them off their books. They have to do this kind of stuff to incentivize people to buy.
What's more likely?
Look at this.
What's more likely? Of course, we're guessing, but XHB, the home builders ETF, up 20% next year or down 10?
Oof. What was it down this year? It got crushed this year, right?
I'm gonna guess it's down 30. Let's take a look. Beep boop boop.
If it's down 30 next year, then up 20 would be my guess.
Down 25%. It was at the worst. It was down 40.
Yeah, I could see a comeback in housing. So we talked about this last week about how you could negotiate for new homes. Got a DM from a listener who said, yesterday I signed a contract to build our new home. Builders asked for $850 for a 5-bedroom. I negotiated down to $715, 15% discount. This is in Jacksonville, Florida. Said the family's growing, they had to move, no choice. But that's a pretty steep discount. And
is it? I guess
850 to 715. That's a lot, right?
Yeah.
If you can refinance, if you lock in 6.5 right now, and you can refinance at 4.5 or 5 in the coming 12 to 18 months, that's not nothing. That's pretty good. Says they're going to be there for 20 years.
Connor Sen tweeted, year-over-year changes in homes for sale searches on Google Trends. Man, I can't read. Damn it, I can't read. What does it say, Ben? How much is it down? Is that 20? That's a lot. That's small print.
It's down 30%.
Down 30%.
Yeah, which makes sense. So Bill McBride had his whole thing about, you mentioned the importance of the housing market. He shows here on his thing, he's showing housing starts and new home sales and residential investment as a percentage of GDP. And every time since the 70s, when these indicators roll over, that has led to a recession.
Again, I'm far be it from me to fight with history, but I do think it's different this time. I'm sorry. I'm not saying that housing rolling over can't lead to a recession. We can. I just think there's so many things that are unique about this particular environment.
Okay, maybe they have this already, but I would love to see the odds on this on Kalshi. Recession starts in 2023, 2024, 2025. Highest probability of happening, because there is a scenario where we just push this off for a ways and we don't have a downturn for a couple of years. I don't. That wouldn't be my baseline, but it's certainly possible. And that would completely, to your point, throw out a lot of historical economic models that people are using, because this period is so messed up.
Here's a great survey from Noah Smith. American teenagers were happiest in the mid to late 2000s. Ben, we were teenage. When were you a teenager? I was a teenager in the 90s,
Yeah, that was me.
late 90s, I guess.
I graduated high school in 2000.
Okay, I graduated high school in 2003. Was that a great time?
It was. Again, no camera phones, no social media. We just were starting AOL Instant Messenger.
Although I do remember severe boredom from time to time. You
Yeah.
would call your friends on the landline.
Yeah.
He's not home.
And just talk. Yeah. Yeah.
And then, like, I would like.
Yeah,
I vividly remember times where I would be on my couch in my living room just looking out the window, which sounds really sad.
I just.
But
no,
it was a simpler time
I watched a lot of movies on USA and TBS
with commercials.
with commercials. Yes.
What did
Remember
we
the TV
here? What did we do during commercials? Get up and go get a glass of water.
It's a good question. You just kind of sat there and took it.
Although there was AOL Instant Messenger, the internet was coming around.
Advertising probably made a lot more sense back then because people actually had to watch.
All right, let's talk about Lululemon. By the way, I think, not to give him ideas, but I think John is gonna put a picture of me looking lonely on a couch, looking out the window.
Oh, I thought you were gonna say he's gonna show you. He's gonna show you in a picture of Lululemon yoga pants.
Okay, so here's the thing. So Lululemon's numbers were good in a vacuum, at least some of the numbers. Net revenue was up 28% to $1.9 billion. Isn't that kind of crazy? Lululemon does $2 billion a quarter in sales.
Well, because they charge so much money for their stuff. Have you ever been into one of those stores? It's too much for me.
I don't think so.
I'm
So
not paying like $110 for a pair of pants. It's too
total
much.
comp sales are up 22%. Comp store sales on a constant dollar basis up 14%. I mean, really good. Up 14%.
Why did you listen to this one? Do you have Lululemon stuff?
I was just
I
interested
cannot
because
picture you wearing Lululemon.
I'll get to that in a sec. So here was the thing that killed the stock. Stock was down like 10% or more, maybe. Inventories at the end of the third quarter increased 85%. Look at this chart of their inventories. This is not pretty. So is Lulu expensive? Yes. Will there be sales? Yes. Do I wear Lulu? No. However, there's competition. You know what pants I do wear? I only have one pair, I think. Oh, I wear bird dogs. Oh, those are expensive too. I have one pair of bird dogs, and I have one pair of, I don't know how to pronounce this.
No one knows how to say it. No one, I've never heard it. No.
Vuori?
Can I buy a vowel, please? It's a very hard
Do
to
you
say
have
name.
do you have those pants? Those pants?
I probably have 3 pair of their warm-up pants, and they are very comfortable.
Very comfortable. So joggers, like athleisure, is a huge category now. And of course,
That's true.
Lulu's
There's
success
competition.
has invited a lot of competition.
But yeah, you should be able to find some really good deal. I'm still getting 60, 70. All the Black Friday deals are still around.
Know what? I might sign up. Does Lulu have an email list? I might notify me when there's a sale. I might get into that.
Not
Although
a
I
bad deal.
maintain that those pants are too expensive for my liking. Just generally, like even the Vuoris, they're all the same. I think they're like, what are they like? Are they $100, $90?
Yeah, I'm not buying those if I don't have a coupon or something. Just principle alone.
So we've spoken a lot over the weeks about credit card debt, and at Wa Buffo tweeted, "Here's a chart that puts current credit card debt levels in a proper context. As a percentage of total salaries and wages."
I just love the Twitter sourcing.
Well, listen,
like,
I'm not just gonna
At
take
Tom 42069.
I'm not just gonna take somebody's chart without giving credit. I'm a gentleman. So at Wa Buffo, so as a percentage of total salaries and wages, even at these higher nominal levels, credit card debt is lower than at any time in the last 20 plus years, except for the plunge during the pandemic.
Right.
So if you gotta adjust it.
You have to have a denominator. So Connor Sen did one. Household liabilities as a percent of GDP. It is back to 2001 levels now. Peaked in 2008, 2009, and has been falling ever since.
And look at this one from Bank of America for Sam Rose. It's all saying the same thing. Average credit card utilization rate by household income based on Bank of America internal data. And it's going down. It collapsed during the pandemic, of course. And it's on the rise again. But
maybe that's the point.
Nothing
is that
remotely alarming.
People are using the pandemic as a reference point to make comparisons to and showing that it's coming off of those lows, and it makes it seem like it's worse than it really is.
Right. Do you want to talk about this high yield stuff? I think that it's just inertia. So there's a story in the Journal about the money that people are leaving on the table by having their money just sit stale at Bank of America, Citigroup, JP Morgan, US Bancorp, and Wells Fargo, which I think they have like half the deposits or more. I think that this number might be a little bit misleading. Here's why. If you add up the total of the entire pile of money there, it's gigantic. But think about how many people have $800, $3,600. So to move accounts to get 3% on such a small number doesn't move anyone's needle.
It also sounds to me like the reason that they are not. So you said it says here the average rate paid on a savings account or money market is 0.4%, which is ridiculous. But it sounds to me like deposits are so high, banks don't have to care. It's a supply demand thing.
I wonder what percentage of this money that's sitting there is, say, over $100,000 or over $50,000 or whatever.
At some of these banks, it's probably a decent. I don't know. It's got to be.
Maybe it is
there's
higher.
probably more
know.
than you think.
Yeah, you could be right.
All right. A bunch of people sent us this. This was a TikTok of like a day at Disney, how much we spent. And it's this family of 5, and they show buying the headbands and the food and skipping in line, and then breakfast with Goofy and then the hotel and all this stuff. And then they spent the $800 on the lightsabers, which we saw those when you go and you like build your own lightsaber, and it was $800. And we looked, and you could buy it for 20. You could buy a knockoff brand on Amazon for 20. And we said, no, we're going to buy the knockoff one because my son was going to break his anyway. $800 to go like make your own lightsaber at Universal Studios.
So I have a question.
Rip-off in the world.
I have a question. Is the laser like a plastic tube, or is it like a light that shoots out?
It's not a real lightsaber. It's a plastic tube.
Yeah, is it a real lightsaber?
But so they added it all up, and they spent $3,700 in one day, and that's higher, way higher than average. But
are you excited for Avatar?
How you can do it. Yeah, I'm gonna go see it. Are you?
I can't wait. I can't wait for Avatar. I absolutely cannot wait.
You have to take like a half day to go see it, though. I feel like isn't it like a 4-hour-long movie? Well, I'm gonna go see.
I cannot wait.
It's the first one is the only movie I ever saw with 3D glasses. Remember when 3D was going to be a thing?
I was never in on that. I think I did it once. I was never in.
They tried to, like Samsung and all these Sony tried to sell like 3D TVs, like you were going to wear glasses in your home.
Yeah. Well, they had 3D movies. They had those in the movies, but I was not a fan.
Because you'd get a headache. It hurt. It was cool. But the Avatar, I remember the Avatar, it was pretty sweet. I can't wait. I think that movie is going to blow out the records. I think.
Yeah.
Whatever.
Anyway, I'm rethinking my Disney experience. A part of me was like, the nostalgia is going to hit me like a tidal wave, and I'm just going to walk into Magic Kingdom and just start crying. But after seeing these videos, I don't think that I think that 7-year-old Michael is dead. He's never coming back.
Here's the thing.
I'm not going to cry. I think I might get mad.
Here's my analogy. Going to Disney is like going to remember in college, you'd go back home, and the busiest bar night of the year was Thanksgiving. The night before Thanksgiving was Wednesday. And everyone would complain about it because it's going to be so busy. But then you'd go, and it was crowded, and you're pushing around, and it's expensive. But you see your friends, and you gain a few memories, and that's going to Disney. Like, it's going to be crowded. You're going to complain, but you're still going to have fun.
Can I say something about Thanksgiving? Because Thanksgiving was a huge thing. Thanksgiving Eve in college in New York, like coming home, going to New York City was a huge thing.
Bars were just packed.
Not for me. Not for me. I never had a fake ID.
Oh, I'm saying once you turn 21.
Oh. True.
You think I could get in? My baby face could get in? My brother did give me his ID, but it never worked because I looked so young.
Anyway,
I'm saying when you actually were 21, you'd go back.
Okay, you might be shocked to learn that I never went to Thanksgiving Eve in New York City.
Okay.
Too much.
You didn't need a fake. You looked like you were like 45 when you were 18.
No, I didn't.
Okay. You still had hair.
Okay. So I just want to talk about this briefly. So Elon Musk was on stage at a Dave Chappelle show, and he got booed into the Stone Age. And then the next day he tweeted like wokeness is evil or something like that. First of all, I don't think woke people are Dave Chappelle's demographics, number one.
Probably not.
Number two, somebody replied to this thread. So this guy did a whole thread. Somebody said, any video of this? And somebody responded with the video. Guess what? That video got deleted. This guy is unbelievable.
That's why you spend $44 billion on a social media site so you can take down videos of you getting booed.
Give me a fucking break, dude.
We're gonna get into this in a minute, but the one thing that the reason I think I like White Lotus so much is just
How come
because
billionaires are so sensitive?
but it just shows how unhappy really rich people really are. I think that's what the show just nailed. Like super rich people are so the and like social media gets them too, even worse than regular people sometimes.
I think the line, and we're painting a broad brush. I'm sure obviously there are lovely billionaires, right? And lovely rich people that money did not poison them.
Don't you think this whole thing the last few years just shows the fact that Warren Buffett survived so long as he did is kind of like I mean, it was a different time, but still, the fact that he did that without blowing himself up and looking like an idiot is kind of amazing.
I think a key takeaway just after like seeing all this stuff and the line at which money becomes a liability is probably a lot lower than people think.
Yes.
Because you get a certain level of money and you start spending and then you move the goalposts and then it becomes expensive to sustain your lifestyle, and any potential downturn in your own personal finance gives like anxiety overload. And I think the line, I don't know if it's 3 million, 10 million, 20 million. I have no idea where that is. It's different for everyone, but I don't think it's that high.
Yes, and it's impossible not to keep wanting to ratchet up and keep up, and it's really tough.
Let's just skip a few things. I don't want to spend too much time on this because this is going to be like the rest of the decade. But Paul Kudrowski tweeted, "I am so troubled by what I see everywhere all at once with ChatGPT in the last few days. College and high school essays, college applications, legal documents, coercion, threats, programming, etc. All fake, all highly credible. I think this is I think this is scary. I think that's my knee-jerk reaction. I don't know if that makes me old.
Don't you think that there's going to be ways where you can just upload a document to see if it's fake or real?
I don't know how. How?
Don't you think that if you can create this AI, why can't you create an AI that detects if it's
How would
real
you
or
prove
fake?
it? How would you prove it? How would you prove that somebody used
You don't think you can upload and say like there's a 99% chance this was created by an AI and you didn't do this yourself? Don't you think that's going to be the?
I mean, a potential really easy solution is just watermarks on these things, but doesn't that defeat the purpose? I don't know. But this is going to be the next thing for the next decade, and that's not a bold prediction. All right, I finally saw. Speaking of Twitter, I finally saw a good ad on Twitter. I finally saw one. So it's New Balance basketball sneakers styled after Billy Hoyle from White Men Can't Jump. Look at these. Are these great dad basketball sneakers?
Did you get some of those for your dad league?
I should buy a pair. Like ironically.
Yeah, but those are like the 1990s. You'd definitely blow out an ankle in those.
No, look at all that padding on the ankle. One more thing that I just want to share. This is just for media. Merry early Christmas. Merry Christmas. Matter of fact, I'm wearing them right now. Actually, I don't know why I just lifted my leg where I could just do this. You see these things?
Are they slippers?
Phenomenal. But they have a sole. They have like a big rubber sole. So you could wear these around the house and you could also take them on the go. I mean, granted, they look completely ridiculous in public, but I don't care. 40% off.
Those are your I just rolled out of bed slippers when you go to get coffee.
You nailed it. That's exactly. I go to Starbucks in these. They're 40% off. What are these called? I don't know. I'll put in the show notes. Thermoball. They're from North Face. If you're in the market for a pair of comfy boots, here we go. And Ben, there's news. I'm back on the Peloton.
Okay.
I rode yesterday for the first time, maybe all year. That can't be, but it's been a while.
Still work? You have to oil it up a little bit.
It still worked. Are you still Pelotoning?
I probably do 3 or 4 times a week. Yeah.
Oh, is that
I still
all?
like it. That's in the winter when I can't run outside because it's too cold. By the way, I rejoined the gym for the first time since the pandemic. I have a Planet Fitness right down the street from my office. It's $10 a month. Here's the crazy thing that's changed since I was in high school. Since I started lifting in high school. Where
have you been working out prior to the gym? At home?
I created like a little home gym. I wanted to change it up a little bit. So I go to the gym at lunchtime. The young men, dudes at the gym, check themselves out in the mirror incessantly. They're constantly doing like the tricep thing and like.
Isn't that embarrassing? I mean, I've never been to a gym.
That's what I thought. These it's usually you'd think of like maybe the women are checking themselves. It's the guys constantly like flexing and checking themselves in the mirror, and not like in a usually you could like sneak a peek while you're lifting and see like how you look. These guys are blatantly checking themselves out, like all over the place. It's bizarre.
I avoid the mirror at all costs.
Okay. All right. Do you want to do this post oak thing real quick?
Sure. You take it, Ben.
Talk about our great readers here. Michael asked, what is the business plan of a 5-star hotel? How does it make money? Someone said, I was listening to it. My focus is on hospitality financing. I won't say the name, but they worked with an advisor where their specialty is structuring debt for America's economy to mid-scale hotel and motels. Post Oak is a mixed-use property that opened in 2018, was renovated in 2021, generated $18,235 per room across, so that's almost $4.6 million across 250 rooms. That's pretty good.
That's nothing.
Okay.
4.6 million for that?
Okay, it used to be 6.25 pre-pandemic. For the property's elite status, these figures are low compared to many lower-tier projects I've reviewed. So I guess he's saying that maybe it's not that great. So like the lower-tier places make more money. So maybe
he said,
right.
I cannot find any debt associated with the real estate. This is strange because only a few institutions would approach us without outside financing. There's a lot to unpack, and I have to spend more time piecing together the capital stack. We'll do it. I'm just kidding. Right. Thank you very much for the email. But okay, if that's true and it's $5 million in revenue, that can't make money.
I guess that doesn't sound. You're right. That doesn't sound that high.
That sounds like. How much does it cost to run that place?
Yeah, maybe you're onto something here. All right, let's talk White Lotus. For my first initial thought.
Let's start here. Sorry to cut you off, but setting the groundwork. Did you know that it's actually called The White Lotus?
Yeah, why?
Oh, I didn't. I thought it was called White Lotus.
Oh, call it that. I think HBO Max is clearly the best streaming service, and there's not a close second. In terms of quality, there is not another, like, they have 3 or 4 shows a year where I'm like, I can't wait for the finale.
Yeah, it's incredible. Just bangers nonstop.
I loved the first season. I think the second season was better, or I liked it more.
Second season was better.
The finale was amazing. Just like I said, the fact that you have a conclusion. I do think that I'm not going to give any no spoil. I'm not going to spoil anything. But Albie would have believed SBF as much as Bill Ackman did. Don't you think?
He knew he was getting taken.
I think, but just like amazing. I love the interaction between the two couples, and just so many like little good things about this show. I absolutely loved it.
Incredible. So I was thinking, there's so much to unpack. Now that we're going to unpack it all here, but it's kind of crazy. Like maybe 3 episodes in, even maybe 4 episodes in, there was not a ton happening, right?
No.
It's just
character development and
it's very difficult to land the plane of a murder mystery movie show. And they did, but that's even besides the point. This show is so much bigger than murder mystery. Like if you ask me who is the best character, who won I would say all of them. Yeah. It was so perfectly cast. I feel like I could have
There wasn't a bad character.
I could have spent another 10 hours with these characters. I'm sad that it's over. What a ride. What an incredible show.
Yeah.
Incredible show.
The scenery is a character too.
Mike White, Ned Schneebly. That's my only frame of reference for him. He's Ned Schneebly to me. He wrote all of this by himself.
It's pretty impressive.
I think. I cannot wait for the 3rd season, which is allegedly is going to be in Asia. I can't wait. I cannot wait. On the plane home, I watched Bullet Train, which is, when I talk airplane movies, this is exactly what I'm talking about. Okay, this is the absolute quintessential 20 to 30% premium on an airplane movie. If you see it in the theater, you're like, yeah, it was fun. You watch this on an airplane, it's riveting, it's gripping, it's fun, movie, it's violent, it's just pure nonsense junk enjoyment, and I loved it. I really did. But wait. I'm being serious now. Don't watch it this weekend unless you're on an airplane. Wait for the airplane. I also watched this in the airplane. All My Friends Hate Me. You ever hear of this one?
Mm-mm.
It was very British.
Okay.
Very British. This guy reunites with his college buddies after 8 years as he was like a refugee worker and out of touch. And he reunites with his friends, and just something is off and doesn't click. And it's a bit like ominous, and you're not sure if something like really bad is going to happen. and I don't want to. I'm not even. By the way, I'm not recommending this. Don't watch it. But it was. If you've seen this, I'm talking to the person that's seen this. Like, it just ended. And sorry for a spoiler, but there was no sort of.
I'm not a big fan of that.
Yeah, it just ended, and I was like, oh man, I was enjoying the movie until the very end. All right, I'm about 30 years late to this movie, but I saw Richard Christie's favorite movie. Some of you will get that reference. Some of you won't. Legends of the Fall. You ever see that movie?
I'm the one who told you to watch it last week.
You told me. Okay.
Yes.
I wasn't sure if it was you or Josh. Not a good
love that
movie. Not a good movie. A great movie.
It really is, right?
And just super depressing. Did anything good happen in that movie?
True.
Everything that bad that could have happened did happen. Beautiful Brad Pitt. I mean,
a period piece.
Just
his hair. Brad Pitt's hair is just amazing.
Just probably the most beautiful man ever.
Yes.
Anthony Hopkins at the peak of his powers. If you haven't seen that movie, it is basically the same thing as The River Runs Through It. You're right.
Just longer and
they're sister movies.
Yeah.
It's on I think it's on Netflix right now. I got into it this week.
Okay. We watched the new Julia Roberts George Clooney rom-com on Peacock.
Any good?
It felt like a early 2000s rom-com that they don't make anymore. And it was like there's a lot of stuff that's really cheesy and corny, but it was still Julia Roberts and George Clooney, so it's like, it's
how bad could it be?
It's a rom-com. It's what you'd
speaking
expect.
of movies they don't make anymore, Legends of the Fall, that movie is never getting made ever again.
No.
It would do it would do 47. Yeah, it would. It would do $47 at the box office.
Right. Okay.
Wait, before we go. Now 1024. S&P is fading. It's on the lows of the day. All right, we'll see.
Makes sense. So stock's up 2% or so.
1.7 the S&P.
All right.
What a day, what a week, what a year.
animalspiritspod@gmail.com. We're not going anywhere. We'll be here for your holidays, right?
Oh, we don't take off.
No.
We'll do our annual recap. I want to revisit the 10 predictions that I made for this year.
We say we're gonna do that every year, like a recap, and we just never do it because it's really hard.
Well, because there's so much content. How do you recap? There's been 100 good shows this year.
Yeah.
And despite
we might have tried to do it the first year, but I think we've done it since.
Okay, we haven't? All right, I thought we did. Despite the terrible Best Picture category, I had a great year at the theater. Credit to me.
Okay. Way to go. All right. See you next time.